Good morning, everyone. Sorry, I'm a little bit sick, so my voice isn't as good as it usually is. My name's Gareth Jenkinson. I am the managing editor at Cointelegraph. I've been covering the space since 2017, so it's fair to say I've seen plenty of ups and downs, and we are really at an amazing juncture for our industry, and it's fantastic to be in Davos once again at the 1inch event and here covering the World Economic Forum. We've got a really interesting panel here today, and I've got some fantastic speakers to unpack the future of DeFi and institutional adoption. Before we get into the general discussion, I'd love you guys just to briefly introduce yourself and chat a little bit about what you do in the industry. Emi, you can go first.
Thanks so much, Gareth. My name is Emi Lorincz, and I work for Talos as the BD director, focusing on EMEA first and foremost. Talos is pretty much the leading infrastructure provider for trading, as well as pre- and post-trade capabilities. We enable you to manage and trade your assets, and we let you basically focus on your business by providing infrastructure for you, which is trustworthy and scalable. I pass it on to you, Anna.
Go for it, Anne.
Hello.
Hi, my name is Winston. I am an American. I lived in Singapore for about 9 years. While in Singapore, I got into crypto in 2017 and then full-time in 2019 with my own startup called Osprey that did anti-money laundering compliance as a solution for financial service providers that use crypto as a financial service product. And then since last year, I've been working for Waves Digital Assets. We manage the treasuries for layer 1 and layer 2 protocols like Ripple, Filecoin, Cardano, Polygon, and some others that you can think of. That's pretty much.
Robert?
Hi everyone, my name is Robert. I'm in the space since 2017 as well. Not very.
I think all of us are.
Yeah, exactly. I'm working for the bank Credit Agricole. It's really a lot of banks. It's like 80 banks in total. There's 150,000 employees. It's really big. I'm taking care of blockchain initiatives for the groups. Originally chess players, but like all of us, I think we started to earn and learn into crypto by ourselves. So coming from DeFi to institutions since 3 years for the group.
I'm just going to give everyone a scene setter here. I remember about 3 years ago, I was at Token 2049, and I met the team from MetaMask Institutional, and they were just launching that product. And the product manager basically told me that the reason that they'd launched MetaMask Institutional was because they had quite a few big clients that were managing millions of dollars of cryptocurrency tokens just in the normal MetaMask plugin on Google Chrome. And the thought of someone messing around with $50 to $100 million worth of crypto tokens just using normal MetaMask was a crazy thought. And I think MetaMask in particular realized that they need to have a much better offering for institutional clients, especially if they're going to welcome TradFi into DeFi and give them an amazing experience. Just to start off the panel, I'd love to hear your guys' perspective on how far the industry has come in terms of taking DeFi products to big banks, Wall Street, institutional investors, and where we stand in 2025.
I can kick it off and then pass it on. So at Talos, we work with buy-side as well as sell-side institutions. So we service some of the biggest asset managers, neobanks, as well as systematic hedge funds. And what's interesting for them is how can they tap into liquidity for specific pairs, which is not available on centralized venues. That's why we partnered with 1inch as well, so we can, our algorithms can benefit of the liquidity for the long tail coins that is not available on centralized venues. How far are we, to answer your question, traditional institutions think differently. Their business logic workflows are very different from DeFi, so they are interested, but we are pretty much at the very beginning of them having an active role in DeFi.
Anne, maybe you want to jump in?
I think there's also the important piece of how we're defining DeFi, because if we're defining it as the degen space where we're still making trading on betting on Polymarket and stuff like that, that's not going to be part of this regulated ecosystem, right? But if we can also define like DeFi and the decentralized finance like just from a purely like ledger and distributed ledger perspective. But I don't think that's like really connected to the ethos of what most of us identify as crypto. Yeah. So in that sense, traditional finance is actually not entering the DeFi space at all. Yeah. But from a regulatory and compliance space, I think once we have those frameworks established, anti-money laundering compliance frameworks that came from like FATF and now MiCA, FINMA, FINRA, all those silly acronyms, then banks can participate at least in the crypto space and in the blockchain space. But are they getting into DeFi? I would venture just by what we would consider the definition of DeFi, no, and they won't.
Robert, maybe you can offer a different perspective here, because I think you guys are dipping a toe, right, or exploring.
Yeah, I would like to be more,
provocative.
But I agree with you. We need frameworks. I mean, the banking system is very regulated, and you cannot, as you said, being a liquidity provider on some DEX. It's not possible. However, there are possibilities. You were mentioning MetaMask. Definitely, this is not something that institutions, banks could do as of now. I'm taking the example of Credit Agricole. There is one entity called CACEIS. They created their own custodial wallet, and that's something you could offer actually to your clients. Now, the question is integrating some kind of regulated tool into DeFi, to really having access to liquidity pools. That's something which is interesting. My view on DeFi and institutionals is that I think we are ending a moment where we saw a lot of pilot projects of many banks, big banks, I mean, we know the names, maybe trying to integrate it into a more regulated system like bank system. So I'm a bit more optimistic on that. And I'm seeing a shift in those possibilities. The most big example that comes to my mind is maybe JP Morgan with their blockchain Onyx, tokenization of assets. If we think DeFi is tokenizing assets, we are here already. I mean, there are many examples. But yeah, it's not. The bank will not buy meme coin of Trump, for example. Yeah.
Maybe not. Emi, maybe you can chat a little bit more about this, because obviously you're serving some of these clients. What kind of DeFi products and services are they actually considering? What's on the table for TradFi in 2025?
As I mentioned, we allow them to pull liquidity from Uniswap as well as 1inch. And we consider actually staking, I think, should be considered DeFi as well.
Yeah.
We have an integration with Figment. But what is also interesting for them is trying out various lending pools. So here I think of Aave or Morpho, for instance. I thought that Coinbase's recent integration with Morpho, it's such a great example how CeFi and DeFi is getting a bit closer and how these institutions can work together. For us, yield generation is what we look at besides trading and having adequate liquidity for some of the trading pairs. And in yield, we can think of LPing as well as other alternatives.
And maybe, do you think that a lot of banks might just consider jumping into a liquidity pool and providing some USDC if that's the most compliant stable coin out there to earn some money, especially if you're sitting on loads of bank deposits and there's a much higher interest rate that you could earn doing that?
No, 100%. I think what maybe we need to differentiate between is the regulated DeFi space and the original ethos of what DeFi is, because those are very different. Yeah. And so, as you were saying, of course, yes, I don't expect Citibank to come and have a ETF of Trump meme coins. So hope, but
you never know. These are crazy times.
Oh God! Yeah. So, but from the regulated DeFi space, I've when I started Osprey back in 2019, banks were starting to learn about this new thing called blockchain technology and starting to get interested and see how it could improve their cross-border payment systems and stuff like that. And we were just a couple of people just sitting in Singapore trying to put things together and code whatever in our spare time. And we got calls from Citibank, DBS, Deutsche Bank, State Street, all of the banks that you can name off the top of your head were calling us to ask so many questions about how they can implement this, like what kind of compliance, how compliance worked in crypto. How does compliance work? How does anti-money laundering compliance work when it comes to wallet screenings, transaction monitoring? How does that connect to KYC and the other parts of the AML process? Because obviously when you have a wallet in crypto that doesn't automatically have any identifying characteristics from a KYC perspective, those things need to be manually added to that, right? But when you go down to the bank with your passport and hand that over and open an account, things look very different, and it's much easier to put all these pieces together. So they had to try and understand from a technology perspective how that's going to work, and from a compliance perspective how that would work. And the answer was, at the time, it's not. It's very complicated. And then we have the travel rule that came out, and the travel rule is really what is being able to facilitate the adoption of crypto within banks. Because without the travel rule, which for anybody who doesn't know, it's basically like what SWIFT is to your bank, that the travel rule is for crypto transactions. So once FATF kind of announced the travel rule, and there were solution providers that started working on that problem, that was kind of more of a catalyst for banks or bigger like TradFi institutions to be able to even consider the fact that they could work with crypto.
We had a conversation last week before this panel, and both Robert and Emi mentioned, like in terms of providing capital to liquidity pools, there's a lot of potential to earn some money there. But as you've also mentioned, making sure that tokens are compliant and understanding that some of these cryptocurrency tokens may have come from illicit sources and that sort of thing is still a difficult thing to do. I mean, USDT and USDC, Circle and Tether can freeze tokens that are, blacklisted. Are we at a point that, some of these protocols can maybe go knock on the door? Circle's here in town. They've got a little house here in WEF. They've been speaking at the World Economic Forum for a long time. Surely they're already speaking to people and saying, guys, there's a huge opportunity here, and you shouldn't be so worried about the illicit, the rhetoric around illicit use of cryptocurrency. I'm just going to throw that out there if you guys think that we've made a move on from that.
It's a very good point. However, if you take a concrete example of one guy trying to have a pool on USDC, USDT, how can you be sure that the USDC or T he is having in his wallet are clean? In terms of how can you be sure he has not interacted with a sanctioned wallet? And this is the topic we have been exploring. You have tools in the market, however, they are not yet perfect. And this is, I think, some pain points for the banks, to be sure that what you are allowing to your clients, or your retail clients, your corporate clients, you are sure this money is clean. And this is, I think, this is a hot topic for the banks right now.
Wait, is there anyone here from like Chainalysis, TRM Labs, Elliptic? Just out of curiosity.
They're in town.
Yeah. Just out of curiosity. Anybody from any of the anti-money laundering compliance softwares? No.
Also, just one anecdote.
Before I give my opinion.
I was speaking with one friend last week. He had 1,000 euro on some centralized exchange, and he wanted to cash it out on his MetaMask. And then the exchange came and said, no, it's 1,050 euros. We are blocking your assets. And because of the new travel rules, you have to show us where it comes from and so on. And he gave the Explorer chain, I think it was Etherscan, it was on Ethereum. And I think there are not the teams within the CX that are capable of tracing everything. So there is also this human capability today. We have some rules, but we have to know how to implement them. And after a week, they gave up because he made so many transactions. They couldn't follow up. Imagine you have 1 million customers, you have to track everything, and it was not possible. And after a week, they said, okay, fine.
Well, a lot of people are frustrated with Coinbase because they often get their accounts suspended. And I'm very curious what you wanted to say to the Chainalysis, everyone else. What were you going to ask?
Well, I also qualify that. So the issue that you're talking about is called the Sunrise issue. And the Sunrise issue in terms of the travel rule is in different jurisdictions, you have the travel rule kind of coming on board in a legislative capacity at different speeds. So in Singapore, back in 2019, they passed legislation called the Payment Services Act, but MiCA only came out a couple years after that, and this jurisdiction after that, and this jurisdiction. So if you're sending money from Singapore to another country, your country says, yes, we participate in the travel rule, and this one says, no, we don't. So we have an issue. So either one party is going to be out of compliance, or the other party has to pre-comply to be able to make that transaction happen. And so, again, we have some software systems that are trying to work on that, but right now, like, the piece that you're speaking of is like, again, when you go to a bank and you open an account, they automatically have your KYC information already, and that's attached to your account. So there's no extra steps to connect it again when you're making a transaction. But in crypto, you know, think of like I onboarded for the first time onto crypto.com back in like 2018 from Singapore, and I didn't have to do any KYC. All they wanted was my phone number. And then suddenly, a couple years later, they were like, "Oh, well, now if you want to keep sending transactions, now we need your KYC information." But for all of the years before, I was trading without that, right? Yeah. So the issue is that these, we call them VASPs, virtual asset service providers, Crypto.com, whatever other institution you want to think of that's using as crypto as a financial service product, they don't necessarily have some, database that's actually has your name connected to your wallet. And all of you were like, "Yeah, good, that's amazing." But when it comes to actually like processing those transactions in a timely manner, if you want to do it within this, again, regulated crypto space, actually now that is, you have to do that. So there's like the sunrise issue is we have, we've been doing things a certain way, and now we have compliance that's coming in, certain jurisdictions that are accountable for this different pieces of the compliance process and others that aren't. And how do we, like, in a global society and be able to trade peer-to-peer transactions, be part of this compliant and regulated ecosystem? And there's just like a learning curve and like an adoption speed of, again, just having these banks be able to start to build up these databases. So they have to build up their database with their customers where they attach names to wallets. And then on the other side, they're working with a counterparty that has to do that. And then they have to exchange this information. And so it's just creating like a lot of layers in between. So basically now we're just replicating the bureaucracy of the traditional banking system. Sorry,
maybe I just want to add that coming back to DeFi and you mentioned chain analysis, there are smaller companies, for instance, Redefine, which can check the composition of a pool, and as a client you can set that if 1 or 2% of the pool are tainted assets, that's still fine. The institution can still partake and be part of that lending pool. So there are solutions. It just, the institutions need to be aware of these.
The problem is, so we all know that blockchain transactions are growing exponentially. At the moment, all of these blockchain analytics providers, Chainalysis, TRM Labs, Elliptic, and all the other ones that you can think of, they still have a manual way of collecting and cleaning this data. And they have these big databases and thousands of people that work for them to collate this data. AI, maybe hopefully that will help, but at the moment, a lot of this is still done quite manually. How do you think that scales? There is no service provider that has a comprehensive database across all different blockchains. So what we need from the industry is specialization. We need someone like Chainalysis to come in and say, hey, we're going to have the best data set for Ethereum-based, networks, whatever. And then we need someone like TRM Labs to say, hey, we'll cover like all these altcoins over here. We need Elliptic to say, hey, we're going to specialize in Bitcoin. We need some specialization because right now, all of these data providers are trying to do it all and be in competition with each other, and nobody's doing an excellent job. And it's just getting worse. The problem is getting worse. And when you compare the risk scores, so you can screen a wallet in all, several of these providers, you'll get drastically different results. So it's crazy. Like you're talking about 2% of a tainted DeFi pool. We definitely have parameters that we set around what's acceptable. What is an acceptable risk parameter? But the issue is you can screen in 3 different tools and get different results. So then what do we do?
Redefine is really specifically looks at the composition of the pool. But going back to the topic of the panel, Wall Street and DeFi, what is the next question?
Yeah, I mean, when it comes to that, I'm quite curious about the changing regulatory landscape in the United States, and then comparing that to MiCA and what that means for DeFi. Are we at a stage now where it's looking a lot better for DeFi adoption from an institutional standpoint, especially in America, where they've got a new SEC chair coming in, and it looks like they're going to have a lot more room to do things, especially considering Trump and his team launched World Liberty Financial, and they're wanting to get into DeFi big time.
I think this is really subject to how the regulation is going to play out. We had so many things promised. I mean, let's see. He did already a fantastic thing. He free draws. What is important, and I think how we will see adoption of institutions in DeFi is that one of the TradeFi, one of the legacy players, one of the biggest hedge funds, is going to tap their toes into DeFi, and they are going to publicly speak about it. But we need regulation for that. We need to be sure about how we eliminate smart contract risk, as well as how we scale. It's the question what everyone would like to know, how the regulation plays out. But what is your...
DeFi is a broad topic, right? If we speak about regulation, US, Europe, we have CDBCs coming in Europe, digital euro. Now Trump was saying in US we are not even sure we want CDBCs. So here you're going to have a huge gap, whether it will happen or not. But if we speak about broadly DeFi, like tokenization of assets or cross-border payments, I see a path for the banks to go on that way, which will happen because you are cutting the costs for transactions. You have intraday settlements. So here you have a path forward. Now regarding, let's say the monetization of it, CDBCs, it will be much harder.
Definitely. I'm also curious about the future of Bitcoin. I mean, there's no out-and-out Bitcoin DeFi solution that, has really taken off. And that is, for me, it still remains a cornerstone of decentralized finance because Bitcoin is truly, a decentralized network. We had spot Bitcoin ETFs. Does the launch of something like that go against, the move towards DeFi and people actually using decentralized finance protocols to manage their money and, move towards a future of finance where you can just upload a tokenized asset like a digital dollar, which is USDC, USDT. But at the same time, banks and traditional finance is very hesitant to go into anything that is not controlled, and where the DeFi space is saying like this is the main point of all of this is we shouldn't be asking permission, it shouldn't be controlled by anyone. Does a Bitcoin DeFi future answer that?
Well, my point of view is that clients are asking for it. So if you don't offer that product, they're going to go elsewhere. That's as simple as it is. Now, whether you offer an ETF, whether the bank is plugged to some exchange or some liquidity is offering Bitcoin, that's another story. But I think to some certain moment, you cannot avoid the fact that you have to allow people to be able to, buy and sell Bitcoin. Now, if US adopts Bitcoin as a Federal Reserve, which is what we hear for months, I'm pretty sure Europe will start to follow.
And not just that, maybe just adding to that, talking about banks and portfolios, and here our acquisition of CloudWall comes in. We purchased this portfolio and risk management system, which helps you have a unified view of all your assets, be it just Bitcoin and Ethereum, or be it your DeFi positions in various lending pools, your staking exposure, your staking balances. So I think we need adequate infrastructure, what the institutions are used to, and the level of sophistication has to be there when it comes to trading infrastructure, as well as pre- and post-trade capabilities.
We've got about 5 minutes left. I'm very curious about the future of the industry going forward, and I want to get your guys' sort of predictions about how far TradFi goes into decentralized finance. If we get a Bitcoin strategic reserve, I would imagine a lot of nation states are like, damn, well, the United States is buying Bitcoin, we have to buy Bitcoin. Would institutions go that way? And could they even just start dipping a toe and actually start acquiring tokenized assets, whether that's stable coins or using various blockchain protocols to tokenize real estate and that kind of thing? What is the future of DeFi in the next 2 years, just especially considering how quickly things are changing with everything in America and maybe not so much in Europe? Go ahead.
I don't know. I think there will be hybrid solutions. So some CeFi plugging to existing DeFi solutions. You see Coinbase as most of the custody solutions for all the ETF. So whether you are going to reinvent the wheel and have your own solution, or you are going to plug to existing and what exists, it will be a mix of everything. And again, tokenization, I think, for big institutions will be the trend, whether it's tokenizing money market funds, stable coins, obviously. So my view is that there will be a mix of everything.
Anne, any thoughts on that one?
As usual, I have a controversial opinion.
Please, go for it.
I think as an industry, we're not having the conversation enough about what the future of Bitcoin, what is it that we want? Because I remember like a couple years back when we would look at projects and like decide if we're going to invest in their ICOs, we looked and saw like, well, how decentralized is the treasury? Like, you know, which founders are holding the most tokens, blah, 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 and accuse them they're not decentralized enough because this founder has 10%, blah, blah, blah. So now we're saying like, oh, governments should have a store of Bitcoin. We should have a reserve of Bitcoin. Guys, like, is that decentralized? This is crazy. Like, we have to remember what is the ethos that we bought into when we, like what's tugged at our hearts in terms of what DeFi is. Mm-hmm. What is decentralized finance? How is that supposed to help people? Yeah. And now we've shifted the conversation to how does it help banks? How does it help governments? And I'm not sure that ETFs and Bitcoin reserves are actually the way that we should go. Now, do we have some creative solutions where we, you know, pair something to Bitcoin, or do we have, you know, is there a way to use CBDCs in a way that is not too invasive to the public? Let's get more creative. I'm not sure that having just Bitcoin reserves and centralizing supplies of Bitcoins with governments is the best solution.
Can I just jump in there? So this year I was lucky enough to get a press pass and be inside the World Economic Forum, and there was one panel.
Does this mean that this year you didn't?
No, I did this year, but I might not be welcome back next time. There was one panel called Crypto at a Crossroads. It had Brian Armstrong from Coinbase, Anthony Scaramucci, Danelle Dixon from Stellar, Jennifer Johnson from Franklin Templeton, you know, people that are actively involved in the United States. And then it had South Africa's Reserve Bank Governor, Letshega Kganyago. And I posed a question from the crowd, and I basically said, Trump launched a meme coin. That's not what this industry is about. Does that take away from the US potentially adopting a Bitcoin strategic reserve? And the reason I asked that question is because the World Economic Forum and central banks, traditional finance, want people to use a CBDC, and they want people to use centralized blockchain protocols so that they can maintain some semblance of control. And that is a problem. And the World Economic Forum not talking about Bitcoin for the last 5 years is the exact reason why I put my hand up and asked that question. If anything, governments adopting a Bitcoin standard is good for everyone because Bitcoin has hard money properties. It's provably finite, it's saleable, it's very portable, it's literally digital gold. And if people begin to understand that, that is what needs to happen. And that to me is decentralized finance. So that's why I say, is the future a Bitcoin-based decentralized finance? I don't want it to be, you know, all of these things. I think stablecoins are great. It's introduced a load of people to blockchain technology, and it's given people the ability to take control of their money. That's what it's about. And I would hope to see a move towards that kind of a future. So I'm glad that you bring that point up because it's an important conversation to have. It's not about centralized control of what is supposed to be decentralized technology. My rant is over.
High five on asking the Bitcoin question, and There was a question about what Bitcoin was mentioned at Davos. Great. To the point, I think it shouldn't be about them or us, or as in banks and the degens. It should be, we should realize that DeFi basically brought on so much innovation into an industry which which has been not innovated for 50 years. I mean, we have AMMs that you don't have in traditional finance, or lending pools that's not existing. So we have to realize that legacy institutions, legacy finance has distribution, has risk controls, and they want to innovate. So it has to be, the culture has to change. We have to Rob's point, I think a unified way is the way forward, together with the degens as well as the banks.
Hopefully it's a unified ethos. We're pretty much out of time. Thank you very much for the lively conversation, and I hope everyone enjoys themselves. Thank you, guys.
Thank you. Before you leave, I think it was a very interesting panel, so maybe we have 1 or 2 questions from the audience. The good questions are rewarded with 1-inch airdrop. So if you had something to ask,
I asked 10 questions. Do I get 10 airdrops?
I'm going to ask you questions.
You asked really good questions, so. Okay. Oh, yes. Nice.
Do you think that it's possible that maybe instead of going slow with regulation and things like this, actually now it's going to go super fucking fast? And Morgan Stanley is going to launch cryptocurrencies on E-Trade, and the retail investors are going to come in, and every other bank is going to bring their customers to crypto, and actually the crypto exchanges that have existed for so long are suddenly going to have to compete with the big retail investment platforms.
Does anyone want to take that?
I love the energy. Very good question. That's for you.
I would love if that happens, but I doubt it's going to happen quickly. I think it will happen in the next 4 years, though.
I think it's going to happen quickly. And I'll tell you why. If you look at the news headlines for any big bank, they just love paying out fines for breaching compliance, but for fiat. So they've been very careful with crypto. But the truth is, if it's going to make them more money than it's going to cost them in fines, they're just going to roll it out anyway.
Yeah, go for it, Rob.
I think nothing will change because when you start to launch initiative, you have compliance and risk saying, not that fast.
I'll counter that point. Donald Trump launched a meme coin on the weekend. The President of the United States, 2 days before he became president, launched a meme coin. I mean, that is one of the most dangerous things you could do. I sat down with Chainalysis' CEO, Jonathan Levin, and I actually asked him, you guys you're passing the whole Solana blockchain. Surely you can do all the analytics here and connect the dots. So if Trump is willing to do this, and he's making wholesale changes, and he's signing executive orders, and we get some of these crypto-related executive orders, a Bitcoin reserve, if that stuff happens quickly, why not? And I'm sure the banks are willing to take that risk, and big financial institutions. I think 2025, none of us really know what's going to happen, and it's super exciting. I'm so excited to be a part of this industry right now.
You guys, what if instead of a Bitcoin reserve, he makes the Federal Reserve be his Trump coin?
Yeah. Or he uses all his Trump tokens and he sells them, and then he buys all the Bitcoin and then uses that for the reserve. Just cancel out the US debt straight away.
We had one question from Orest.
Thanks. Quick one, but maybe a very broad one is, you said that there is a way forward for degens and banks. What is the way forward? Like, is it custody and KYC for DeFi as a way forward?
No, I think staking is going to be the first one. What is interesting, what we see already happening, or maybe an Aave ETP ETF, or it can be them participating in lending pools through tools like Redefine, which is helping you to pre-screen various pools. So we will find out.
Yeah, I mean, I would just say, like, there's probably a lot of degens in this room that are trading meme coins and everything. Like, when you make all of this money, how hard is it for you to bring that money out, and what's going to allow people to do that, to trade freely on DeFi protocols, whether it's, any of the Solana dexes or a Sui dex or anything like that, and you make a load of money, you want to get this money out. like your bank's going to be like, where the hell did this $25 million come from,
$25 million of fart coin to exchange
exactly.
for...
I mean, imagine explaining that to your financial institution.
Or on your
this money come
taxes.
from? Yeah,
So in the US, you have to disclose your crypto transactions on your taxes. Imagine telling them that
I made $100 million trading
On
fart
Fartcoin.
coin. I mean, we live in a movie.
Okay, last and quick one from Mark.
Shooting quick, yes. And you mentioned like why many people got started and excited in the first place with engaging in crypto and decentralization and you alluded to it, right? I think more recently it's all about how can we make money super, super fast, and many don't really care. We don't talk decentralization enough. It's not rewarded enough. Nobody looks at how many nodes are live and where they are, and like where are we going? Is it just speculation and running after money, or is there something underneath that maybe finds the back the way out? And if so, only in the next bear market or before?
I think we're really losing our sense of community. I think a lot of us have started kind of earlier in crypto. The community was super strong because there weren't many of us. So we kind of like took care of each other. We were trading information on how to swap things, like do bridging between different blockchains. And the community, because we've kind of grown and now TradFi people have come in. No offense, we love you guys, but also it's changed the culture a lot. And the conversations have shifted so much. And I do think that and this isn't a community that is different from any other community, right? Your neighborhood, do you have clean water? Do you have trash that comes around? And we kind of get disconnected and we don't take care of our communities. And I'm very concerned that what has happened to many other communities agnostic to crypto is starting to happen to us when it was too big too fast, too much interest. And I would really love if I could just tell everybody and evangelize something, it would be let's go back to taking care of our communities in crypto and talk about why we got in it in the first place and how we can use decentralized finance for positive things. And bringing institutional money in isn't necessarily a bad thing, but how do we make sure that the entire conversation isn't focused around institutional money, and it's how do we bring that institutional money in order to support the original communities and grow the ecosystem in a sustainable way that benefits human beings and not just a bank.
I will also just say, I think there's a concerted effort among the people that matter to drive decentralization. Vitalik, for one, last year said to all the Ethereum L2s, you guys need to make concerted efforts to decentralize your layer 2s and make sure that you have lots of nodes and there is no decentralization or centralization risk. Some of these other protocols, this is still remains a big criticism, is that they're actually quite centralized. There's not a lot of validators and nodes running, and that's why something like Bitcoin remains the gold standard for this, because you have thousands of nodes across the world, and then the mining network actually doing the work, but it's completely decentralized. Me and you can trade peer-to-peer around the world, and that's why it matters. And a CBDC, governments, politicians, those people talking about using blockchain, stop using buzzwords and don't pretend this is something that it isn't. That's my general take, and hopefully the people that matter keep driving towards that. And if you're not running a Bitcoin node and you have a computer at home, run a Bitcoin node. If you're interested in being an Ethereum validator, in a few years' time, you're going to be able to run a validator on a phone thanks to zero-knowledge proof. So the move is going that way, and it's going to allow everyone to be their own node and manage their data and manage their money. So I'm pretty hopeful, to be honest, but it's not going to happen overnight.